It's a pleasure to anchor a very exciting topic, making the big league. But before we kind of begin the session, let me share with you some stats on the screen. Can we play the slides? So, if you can see, we have the Fortune 500, which is the marquee club. And the number one guy for quite some years was Indian Oil. It was dislodged by Reliance, and it has been there for the past 4 years. The 2023 rankings are yet to be out. So it's very clearly when size and heft comes into play, the number one remains the number one. But if you look at the Fortune Next 500, the number one guy keeps changing. And that brings to the fact that change is the big constant in Fortune Next 500. So the takeaway from all of this is that if you are not the number one, you are either going into the Fortune 500 list or you are falling down. And from the list, we have got 5 companies which have gone on to the Fortune 500 and 3 companies which are still languishing in the next 500 list. And among our panelists, we have Mr. Rupan Singh, who represents a Fortune 500 company. He was part of the Fortune Next 500 for quite some years, but he has made it to the big league. So let me start off with you, Rupan. What are the factors at play that has really propelled growth at GMDC?
What are the factors? A lot of people getting together and working hard. We had 2 very critical years. There was a huge demand for the product that we produced, and before that we were not able to ramp up production. 2 years were very critical for fuel, as you know. So the team rose and we ramped up our production. We were able to onboard more customers while there was a constraint, target them better, price our product depending on the capacity, so that it gets absorbed. So a lot of hard work and a lot of smart work.
Asim, your company has been a toast on the street for quite some days, a favorite pick among fund managers. But as an engineering equipment company, it becomes quite a tough challenge also when the cycle goes against you. So can you explain to us, what is it as the factors that are at play, since you are primarily catering to the chemical and the pharma sectors?
Yeah, sure, Keshav. So just as background, I represent GMM Fowler. We make capital goods for chemical and pharmaceutical companies. You're absolutely right. We are dependent on the capex cycle of our customers. And so a big part of being successful in this space is to figure out, have a sense of the pulse of the industry and figure out when you need to invest in capacity building and when you need to really hunker down and sort of be more focused on the sort of margin and cost side of things. I think we've been very fortunate to have tailwinds behind us with strong growth in the pharmaceutical as well as the chemical industry over the past really decade and a half, if not longer. I think given the current geopolitical situation, as well as sort of the inflection point that India is reaching now with the GDP per capita hitting around 2,500 or so, where we think there is a lot of room for growth for our end customer segments. So I think we've read the pulse of the industry and we have invested to be able to cater to their requirements, and that's really helped us, especially in the last 6-7 years.
Yeah, we'll come back to that. Manish, your position also in the diocese, you have taken the center stage in some sense. So, and we have also seen a radical jump in your turnover over the past couple of years, and you represent and operate a business in a space which is coming up, carbon credits. So if you take us through, what is actually driving growth and what was the reason for this sudden jump in revenues for the company?
Yeah, so thanks for asking this question. We are into the carbon credit business, and one carbon credit is 1 ton CO2 emission reduction from the atmosphere is one carbon credit, which is an environmental commodity. There are various different markets which do exist. One is international voluntary carbon markets. So after The Paris Agreement had been signed by all the nations, including India, during 2015. Still, all the nations are not able to come over the conclusion on how the trading of carbon credits will do happen between the two nations under Article 6 of the Paris Agreement. So during 2016, 17, 18, there was a high voice like the private sector should take more accountability, more responsibility till the time nations are not very much ready with all the regulations. And that is how international voluntary carbon markets had got very good pace after 2015. During 1819, there was a very high demand that came from the cryptocurrencies who are looking to become carbon neutral. They were creating fungible assets while cancelling carbon credits, and they were issuing cryptocurrencies which can be used for either investments or trading, or maybe burn those carbon credits to achieve your carbon neutrality. So that was the another first factor was more consciousness between the private sector and specifically developed economies. So companies in developing economies like India, China, or Brazil, for example, they are still they do not recognize much to the reduction of the carbon credits. But since this industry is some 15 years or 17 years old in developed economies, so they are the private companies there are very much aware, their consumers are very much aware related to the eco mark or carbon neutral products or services. So the first demand, the high demand was from more consciousness. Second one was because of the cryptocurrencies. Third one was because of the CORSIA international treaty, wherein all international airlines were having mandate to buy carbon credits and become carbon neutral from 1 January 2021. Further pressure because of ESG, sustainable supply chain. So these were the major drivers for getting more and more demand, and we were the major beneficiary across the globe because we were working since 2016, 17, 18. We had created many projects. So our company do hold 25% market share internationally. Whatever the credits that had been consumed by all major big corporates or government organizations in the international voluntary carbon market had been supplied by us. So we were working from the initial days during 16, 17, 18, and the market got its very high peaks during 2021 and 22. Yeah.
Okay. Sanjay, you have worked with brand companies before, both across different sectors, and now you're running a business which is not so sexy. It's a contract manufacturing, no brands. I mean, you're the faceless guy who's making. So, give you can you give a sense of what is happening at Hindustan Foods? What is driving growth at Hindustan?
So thanks, Keshav, for that question. Of course, so I represent Vanity Case Group, of which Hindustan Foods is the flagship company. We are a listed entity. So what's really started off as a one factory, one product company is now 27 factories. And this has happened over the space of last 10 years. So we are the largest diversified and trusted FMCG contract manufacturer for both domestic and international brands. Now, over the last 10 years, if you look at what's really happened at the macro level, I think a couple of things really propelled the growth of FMCG sector itself. So we are a subset of that. What impacts FMCG impacts us. So it's a complete mapping of what really is driving FMCG growth, and therefore that's business for us. If you look at in the sort of economic policies at the government level, both in terms of GST implementation, in terms of ease of doing business, and at the same time, all of these have had an impact in the way FMCG markets have evolved. More in terms of creating supply chains which are closer to the customer, decentralized sort of manufacturing capacities, and I think Hindustan Foods was quick to take the opportunity, and therefore the timing was perfect for us to be able to utilize that into our growth. So we have seen that growth, and we are, as I was saying, quite geography agnostic, product agnostic, and customer centric. And I think that's the reason why we've seen our customers stick on with us. And you'd be surprised. I mean, the kind of flexible business models that we have today, really customized for the customer, in a sense for the client, is helping us to drive our own growth within our group, right? Today we have shared facilities where we would be making products for competition as well, with all the secrecy, with all the confidentiality agreements. So I think what has really happened is, and as you said, I was on the other side of the fence before, you do have a lot of issues, right? Capacity utilization, or pretty much fixated on doing certain kind of lines. I think for Hindustan Foods, the ability to be flexible, ability to have a quick turnaround of capacities, products, fungible capacities, I think all of these in a very structured way, in a very professional way, have really evolved, and I think that's the confidence which our customers have given us, and that's one of the key reasons why we have grown at a fantastic pace over the last 10 years.
Yeah. Vishal, you represent an industry which is hot and thriving now, payments. So can you share with us how is Infibeam making the most of it?
Sure, thanks Keshav. So we run a brand called CC Avenue. If you've made an online transaction, you would have come across a payment gateway called CC Avenue. And we build software, specifically for the government that some of you may have used, government e-marketplace. It's completely built, conceptualized, developed by us. Now see, in that business, we process, the numbers are staggering. It's extraordinary. In 2016, we processed 5,000 crores of transactions in a year. The number we make a very chota sa, very small fee on every transaction. So on every 100 rupee, we actually make 7 paisa. And just because the volume of transactions grow, so our revenues grow. And last year we did 4.5 lakh crores of transactions, which means what we did practically in the whole year, now we do it in less than 3 days. And that is a processing volume that is increased. So if you look at the payment industry, there are 3 main ingredients in the payment industry which are very important, and that drives growth. I think it's the product, the pipeline, and the trust. When you make an online transaction, you just want to feel comfortable and feel कि अच्छा पैसा दिया है, whatever I've given, it has reached the second person. And in my opinion, RBI has done a fabulous job of regulating this, because if even today you hear a little bit about cybercrime here and there, but if you look at an online transaction, whenever you make any payment, whether it's debit card, credit card, UPI-based payment systems, or even IMPS, RTGS, whatever it is, you feel very comfortable. So trust is a very important factor which has grown this industry. Second is the pipeline. So real-time settlements, real-time payments and real-time settlements. It's almost unheard of. I mean, India is so far ahead on the curve compared to any other country in the world. And thanks to UPI and some of the initiatives that the government has taken, and RBI has taken, NPCI in specific, to be able to create those rails so that you can innovate on top of it. So I think, in the month of March, 8 billion transactions. The numbers are so staggering that you can't even think about it. And today, just so that you know, only 200 million out of 1.4 billion people in India transact. So imagine the opportunity in front of us. And, I'm reminded of my old boss. I worked at Amazon, Jeff Bezos. This is back in 2001, 2002. And he used to go back and think that, listen, if you're not solving scale, you're not doing anything important in technology. I think there is no bigger scale than payments in India today. Everyone, whether it is a person who wants to pay for education or entertainment or even a kirana shop, ya jo bhi bataye wo, I think it's actually becoming mainstream. And that's driving quite a bit of growth for us today.
Okay. And making the big league, capital allocation plays a big role for most companies and businesses. So Asim, can you take us through, how do you kind of make that call, especially at a time when cost of capital itself is going up and inflation itself is a challenge. So bang for the buck, how do you make that call?
Sure. So, I'll sort of build on the point I was making earlier about knowing where the industry is going and then investing accordingly. over the last 5 years, we've consciously invested in capacity in India. We've grown from 1 factory to 3 factories in India, 16 globally. And that was because we knew there was a requirement, there was a growth drive that's happening in India. And by the way, we expect that will continue. So as far as figuring out what to focus on and what to put the capital on, our approach has been quite clear. We first sit down and figure out where we think the industry is going, our end customers' industries are going and what the requirements are. Based on that, we assess whether we need capacity or we need technology. We feel we have invested well in capacity. If you look at our track record over the last 5 years, we've also invested in technology, both through M&A and now increasingly through in-house development. So it really comes down to figuring out what your customers need and anticipating what they will need, not just hearing what they need today, but anticipating what they'll need in the future. And that remains a focus for us at GMM.
Manish, how are you taking the call? Because carbon credits, it's a volatile thing and you made the most of it, like you said, with the crypto boom and now crypto kind of fizzling out. How are you deciding to spend the funds and which are the areas that you're focusing to spend on?
Yeah, so from 2015 onwards up to 2022 specifically, if you see, we were majorly focusing over the international voluntary carbon markets, wherein the demand was voluntary in nature, and that is why once the demand is voluntary in nature and if you do not have any compliance, then definitely demand, if the supply will do increase and demand will remain the same, or if may reduce because of, say, Russia-Ukraine war, many European companies had got impacted because of high energy prices, so carbon credit took a back seat in that specific point in time. So now many emerging fields are there in our industry. One is the mandatory emission trading scheme, which Government of India recently had declared through Energy Conservation Act 22, wherein many big emitters or maybe mid-size level emitters, because for each specific sector, maybe like textile or pharmaceutical or sugar industry or various different sectors, Government of India had declared a benchmark that if you do emit more than that specific tons of CO2 equivalent, then you will be getting the cap over the emissions. So this specific mandatory or compliance carbon market which is going to get implemented in India definitely will give a new avenue for us. Definitely it will take more 6 months to 12 months to get the full clarification related to the specific policy or law implementation policies. The third avenue which is going to come is Article 6 of the Paris Agreement. So under Paris Agreement, if any nation would not be able to meet their net zero goals in the short term or long run, then as per Article 6 of the Paris Agreement, they are allowed to buy carbon credits from other nation, maybe developing nation or developed nation. And that specific market, definitely, as I mentioned, we do not have clear regulations, but during COP28, Conference of Parties meeting number 28, which is going to happen there at UAE during November, December, more clear regulations will come. So two different bigger opportunities. So voluntary carbon market is only $2 billion having market size globally. And definitely that specific market is intended to grow by $40 billion by 2030 and $500 billion by 2050. But these two markets are going to be of $1 trillion industry, and that is that will give more and very high growth opportunity for our industry.
So you're waiting for clarity before you kind of decide to spend. GMDC, Rupant, is both in lignite as well as in power, and you seem to be expanding into power as well. So could you kind of take us through how is your capital allocation? What are the considerations behind making those calls?
So the core is, it's a mining company.
Right.
A mining company will not be able to make money unless it spends. And if you need to grow fast, you will have to spend aggressively. The spending is fairly straightforward compared to what my friends on my left and right are sitting there. A business case is made and we just move ahead. So we have huge plans. Capex plans for this year are 3,000 crores. GMDC has moved into an adjacency. Whatever we did in the past is basically based on lignite. We have moved into coal. The capacity that will come from coal is going to be 2.5 times what we have in lignite. We have moved outside Gujarat. We now have presence in Orissa. So that brings us to the second question of downstream integration. Downstream integration, yes, the capex multiplies. Depending on the kind of business that you do, returns are assured or slightly not assured but higher. So if we go for a limited capacity in thermal, the numbers are huge. If we go for full integration into downstream integration into thermal, the numbers will touch 40,000-50,000 crores. But it's an assured business, and whatever we do, we would have the state government at our back, because we would be taking care. We are a state-owned enterprise, majorly controlled by the government of Gujarat, and we would take care of that. While having ambitious plans is one part, developing spending capacity is the real challenge. We have had capex plans over the past 10 years ranging from 200 to 500 crores, but we have not been good at it. So how will it change? How will these big numbers fructify? We have onboarded external voices and systems of external checks. Amongst the biggest names are working as either advisors or as PMCs to us. Hopefully that will help us realize these big numbers and dreams, because the entire growth story is based on it.
Sanjay, as contract manufacturer, you also got into different business streams of late. So if you would share with us, what is it, and why is the need for diversifying beyond FMCG?
So largely our portfolio is FMCG products, and as I said, we make everything from color cosmetics to shoes for exports and everything in between. So the scale and the capacities have really evolved. We're today one of the largest manufacturers of ice cream in the country, as well as for liquid detergents. So these are capacities, huge scale, huge complexity, but we've managed to do well, and therefore continue to do well and add on more with respect to the product categories. However, what we have looked at is what are the adjacent businesses that we could get into. And the category or the portfolio that we have identified is OTC pharma. Not very different. We're not looking at the sterile end of it, but we're looking at immediately where we could utilize our existing competencies, our experience, our understanding, and therefore utilize that into an adjacent category, and that's OTC pharma. So in this context, we have made 2 acquisitions already. One which is about foot care products, again contract manufacturing, which is totally exported to various countries in Europe and UK, and another site, pharma site, which is in North India, which has been acquired, which is again into a portfolio of OTC products. I believe this is the way that the pharma industry will grow. There is a huge potential in the area of nutraceuticals. We are seeing a good amount of growth coming in that area. In terms of cosmeceuticals, in terms of functional creams. So a whole lot of evolution is happening in these, where the premiumization of some of the products is beginning to show. And obviously premium products are today really moving up in terms of both value and consumption. So therefore it was a natural corollary to really move into adjacent businesses, and that's how we've come to stay and strategically moved into this category altogether. So going forward, our aim is to make this business as big as our current FMCG businesses, both through organic as well as through inorganic routes.
Okay. Vishal, in tech, you tend to sit on a lot of cash. So it's a cash spewing machine in that sense. So could you take us through, how are you looking at your capital allocation and what are the adjacencies and new growth frontiers that Infibeam is targeting?
Sure. So we try a lot of experiments. If we have to fail fast. And the ones that work, we pour gasoline on that fire and make it large. I mean, that's the high level thesis.
So how many such projects you have put gasoline on?
Oh, I have a lot of scar tissues, so I can tell you a lot about it. But the way it works is that, see, I think you need to come up with an investment thesis. Even in tech, you need to have it's not a hypothesis, but it's an investment thesis. Short of an investment thesis, it becomes very hard. The most important thing in technology is that you need to figure out whether, you are in the growth phase, you are in the testing phase, do you have a product market fit, where are you at? Because most people will go wrong. If you think that you are in one phase and then you try to pour gasoline on that and try to go very fast, you crash and burn very quickly. So the perspective that I carry is that, once you have a very strong thesis of product market fit, then you put the pedal on the gas and then you try to make it very large. And in that process, you may overspend in certain areas, if that makes sense. But what you do not do is you don't, just go and say, let me hire talent at whatever price, let me do this, because that's a huge amount of investment. What you do is you try and figure out that, hey, listen, I want to keep on growing. I want to make sure that it's contribution profit positive, so on and so forth. And then you build out that framework in your mind. So that's in a nutshell what we think is important. But like I said, the important part is everybody in the company should know where you stand. Are you in the growth phase? Are you in the testing phase? Are you in the product market? One example I'll give you is all transactions today for CC Avenue, they happen online. If you're an online store, whether you have a mobile site, whether you are a mobile app, whether you want to pay utilities like electricity, gas, school fees, college fees, everything is online. We came across a very interesting opportunity where we said, hey, why not go offline? Now, in offline there is point of sale and QR code, which is the UPI-based payment systems. But a lot of point of sale are there, like the Pine Labs of the world and many others. They provide this box, point of sale device. And when you go to smaller shops, you can pay by UPI, but you can't pay by credit card because they don't have the machines. Because the cost of a machine is very high. It's like 4,000 to 6,000 rupees a machine, even if you want to purchase. So we went and acquired a company. They did not have the licenses back then, called Uvik Technologies. And what they did was, we realized that everyone in India does not have a point of sale device, like a merchant in specific. But every merchant has a mobile phone, a smartphone. So why don't we allow them to just download an app and start accepting payments using NFCs, like TAP. So today we are one of the only companies in India that has pin on glass certification by all card networks. You literally, in India, acceptance is a problem. Issuance is not a problem. There are 800 million RuPay cards, but if you go to any shop, you can't accept payments, except by QR code and a few other things. Even that is on the rise. So we said, why don't we actually take that call? And it's a bold bet. We actually paid a lot of money for a company that made zero revenues. But we said that there's a product market fit, and let's actually drive that conversation and make that decision. So
compared to all of the panelists out here, your industry faces maximum disruption and maximum challenge, and the maximum capital gets cushioned. So can you give us a sense of how are you looking at the disruptive forces? How are you trying to stay relevant in the game that you are in?
See, we work in a payment industry, and payment is fairly regulated. So let's start with that. And it's one of the only industries, because regulation usually follows technology. In this case, in India, in payments, regulators far ahead on the curve. So they have actually enabled disruption. I mean, short of them wanting to hear this, I think it's reality that they've created a platform where you can actually build out frameworks that enable disruption. So the way we think about this is, Again, going back to the product pipeline and trust framework, products have not changed. Financial products are still the same. You have savings, you have credit, you have insurance, you have pension. Those products have not changed. The pipeline to deliver, the way you reach out to the audiences, that has evolved tremendously. So India is very unbanked. Now there is a lot of things like Jan Dhan and many others that have come up, and a lot of schemes that government is promoting. But the fact is that in an unbanked society, fintech is a phenomenal opportunity to reach out to the bottom of the pyramid and be able to provide services and make sure that that financial inclusivity is there. So we think that is a major pipeline is where a lot of effort has been spent, and the technologies that have to evolve to build out more and more trust are very interesting. So you may think about Soundbox from Paytm. It may be a very small thing, but it's actually changed a lot of behavior in terms of how merchants accept payments. So I think these small and large innovations are the ones that will actually be very disruptive. We think that that is where it starts. And you know, I think as we progress, you know, we were the first company that accepted RuPay transaction in the country, with the RBI governor being on our side. The first CBDC transaction, the central bank digital currency transaction in the country happened through us. So those are very disruptive because people don't realize it's not payments, it's real-time settlement. You know, so those are things that we think will be very interesting as we build up.
And another interesting and facet about growing fast and making to the big league is that there is a tremendous dependence on your manpower, your resources. So I would keep it like an open question. Anyone can take it. That how are you looking at differently hiring and nursing talent? And anyone is free to take a shot at that question. Who wants to go first? Especially in manufacturing. Is that a hiring talent and key talent?
Yeah, it's certainly a challenge. Maybe I'll start.
Especially with automation and
Right.
talking now.
So, I mean, I'll share the experience of our company. We've gone from being basically a one factory Indian company to 16 factories globally. Much larger. We've grown about 5x in the last few years, last 4-5 years. So as you go up that kind of a growth curve, obviously enabling that growth, sustaining that growth becomes a challenge, and getting the right people in jobs is very critical. So the way we've approached it is, first and foremost, as we went from being an Indian company to being global, we made sure that there was alignment amongst the leadership. We've over-indexed on ensuring that alignment is there, both through frequent interactions as well as through very clear incentives that ensure alignment in our behaviors. And I think that's really worked well. There's ESOPs for the top leaders, etc., which is, I think, quite a unique thing in our industry. Well, it's not uncommon elsewhere. The other thing, of course, is as you go down the chain, making sure that you have the next generation of leaders that can step up and again scale their thinking, to be again a large company. This is where a very well structured and defined training program, development program comes in place. Here too, we have invested a lot. I myself spend a lot of time with my HR colleagues to define that and ensure that we have training programs in place that really build up not just the technical skills, but also sort of the organizational smarts that are required when you move from being from a small one factory kind of a setup to a large company. So I'm actually pretty happy with the way it's going. The third leg is, I think there are critical needs where you must hire from the outside. That too is something we have been doing. I think there's still a little bit more that we'll probably do in the next couple of years. But I think it's something that has to be on top of every CEO's agenda, because without the right people, sustaining this growth is next to impossible.
I believe my perspective on this will be totally different. We being a state-owned enterprise, we have two big challenges. One is basic competence, which each of you would be having, this side, that side. Second is cultural. So somebody wants a job, since this is kind of like a government job, so people come with a sense of entitlement. So he's looking for a job I am looking for competence and work, so there is a fundamental mismatch with the traditional way of doing things. In the short term, we've tried to solve it by getting the best people from the market on a shorter term, promising them a better deal and expecting more from them. But as we triple our lignite and coal capacity, as we go into downstream integration, we will have to fundamentally solve it in two ways. One, getting people right off from the best colleges and getting in people at the intermediate level to groom our leaders. Otherwise, a sustainable performance on a company which has 25 to 30 million ton per annum production, which probably manages 2 to 3 gigawatt of an asset, we will face a challenge, say 5-10 years from now.
So how are you looking to entice fresh talent? Is it by better pay, market pay, or career visibility? What does it do?
So in the short term, we've solved it through giving them a better deal and getting the best people from the market. In the long term, we would like to alter our recruitment strategy and get a large number of youngsters fresh from the best colleges, the mining or engineering colleges that are there. And that change, I don't know how much it will happen or not, that culture of entitlement will only be changed by having ambitious goals and pursuing them.
Just to add to what has been said, given my experience in different companies and even in where I am currently today, the attrition is mostly at the initial stages, between 1 to 4. So and there's a lot of data and analysis which every company does, and I think this is where the big issue lies. And therefore, a lot of the tailoring, a lot of customization is to how to hold this group to make sure that they don't leave, right? And the way that we've looked at is to try and see if we can give them multiple experiences in the short phase of time that is there. Obviously to build in some sort of reward mechanism like retention, bonuses, etc. And to create an ecosystem where they can have a sort of a more responsibility. They look for higher level of responsibility even as they step into into their respective roles. So it's a mix of these three, but the biggest challenge has been to hold this group between 1 to 4 years. And as you go higher up in terms of experiences, you will find that the attrition rate comes down. So you have to really cut and dice it and therefore create a sort of a focus or a work plan based on this sort of analysis.
Vishal, how are you doing? Anything different?
I've made the classic MBA mistake of looking at a particular position and then finding a right resume. You have a perfect job description and you go to a recruiter and the recruiter will go and say, kitne saal ka experience hai? And you try and interview the person and fundamentally I think for tech companies it doesn't work that way. I think what you need to do is you need to start thinking in terms of less of skills and more of values and aptitude in terms of how you recruit. So what we do is we love people who can learn and who can adapt because things move quickly, things change quickly. If you're experimenting and if it doesn't work, then you have to go to the next one and then the next one. Over a period of time, you definitely need a lot of system process and so on and so forth. There's no argument to that. But the whole idea is that you don't want too many managers. You want more, there will be execs and managers, but what you want to do is allow people to be an agent of change. You mentioned about disruption. I think that's the one that we love. We love people experimenting new things within reason and figuring out, what works and what does not work. And the corollary to that also is that we also need people who can, wherever you have to do any kind of scaling up and so on and so forth, you need to have people who have experience who can actually make sure that, you're driving that appropriately. I think, we've been very fortunate that I think people join people fundamentally. They don't join companies. You do need a name, but, I think, I'd join somebody that I would admire and I can learn from. I think in the tech world, that's more relevant compared to maybe some other industry verticals. But I think in the tech world, I think you would fail and you'd be hosed if you just go and say, okay, let me just get the resumes and let me try to match it out.
As we are drawing to a close, I just want everyone to kind of articulate on one lesson, leadership lesson that you have learned in the journey thus far in scaling up. Asim, if you want. Yeah.
I guess what the one...
Both good and bad. It doesn't necessarily have that.
I was going to say one lesson, now you got me to go with two. The one I would talk about most is, and this is a personal learning I've had as I've scaled up from being a individual contributor to a team leader and now to this current role. In earlier stage of my career, I tended to be much more detail oriented, as one has to be, because you really need to be on top of stuff. And then as you grow up, you need to be a lot more strategic. That's fairly obvious. But figuring out when you want to be strategic, when you want to be tactical, I think is critical. So being able to wear those two hats, that I think is an art, because if you don't wear the right hat at the right time, it can lead to a lot of mistakes. So I think, to me, that's probably the biggest thing, and I continue to try and work on that, because each situation warrants different hats, and as a leader, you have to have that ability to read the situation and wear the appropriate hat.
Manish?
So for me, each business used to have different resources like financial resources or human capital or clients or vendors or various different resources used to be available. So for any successful business, I do believe proper utilization of all the resources makes the business very much successful, and chaotic utilization of those resources used to make business push into the failure mode. So each year, so before getting listed, there were different experiences that I had learned during the 10 years or 12 years journey. After getting listed, the whole different avenue is there. That means need to manage the clients and people within the organization. So that was before the listing, but after listing, we do have various shareholders, various different regulatory bodies to work with. So definitely it made me more resilient before and after listing.
Organizations like ours.
As a bureaucrat, does it mean any different?
Yes. The journey is very different from my friends. Organizations like the one I head, they need two things, and whenever they go wrong, they have lost out on these two things. This is what I have figured out in this journey. One, when they stop having a vision, and that is the leader's job, to have a vision, to take it further with the team. Vision and team. Usually these kind of organizations, what happens is, being a bureaucrat and state-owned enterprises, sadly I shouldn't be mentioning this, a group, a clique, that tends to run it. It has to be broader. You have to rise above them. You have to have everyone believe in a common destiny or a common vision for the organization. And everyone has to have the right behavior towards it. So I believe this is the biggest leadership lesson. And at the end of the day, I am the one who will be exiting this organization. Rest, everybody stays the same. So I don't want to leave a bunch of squabbling grown-ups. So they have to be a group of friends who've grown up and who want to take it to the next level. So vision and a team.
Okay. Sanjay.
Well, definitely not an HR masterclass, but clearly over the years you do observe leaders, and then one tries and imbibes the good points or the ways to live that journey ahead. And such has been the sort of learning for me over the last decades. But I think at the end of it, what it really boils down for me is about trust, right? It's about the trust in your team, it's the trust of your clients, and it is about saying that, look, alone I cannot do everything. And that's the evolution from being a micromanager to really then letting go. I think that's been an important lesson for me, that to let people do their things and give them whatever is the sort of goals that are required to be reached, and trust them to deliver that. I think that's the way that I have evolved at this stage, and I think this is a happy place to be in.
Vishal.
See, I think there are, in my humble opinion, there are three things that are required for success. A very smart guy told me once. And I think, it applies to every case, at least it applies to my case. First is that you need purushartha, or very, hard work, ability to manage risk, take risks, so on and so forth. And I think that's, practically every leader, one has to think about it. You need to have that. The second thing is, having very smart people with you. I think that one is somewhat undermined. It's a cliche, but the fact is that many a times we find people who can do the job, and we don't find people who can challenge you. Because a lot of jobs, they don't require that. And what you perhaps need to think about is, have someone very smart who can actually either think about doing it more productively, think about a different way to do it. And when you surround yourself, if you think about Silicon Valley is there because you have very, very sharp, smart people around you. And you actually combine the tech innovation with the business innovation, both of them, they come together, and then it becomes somewhat disruptive. So I think the second one is very important, which is have very, very sharp, smart people with you, because you don't know everything. And so as long as they can cover your back, they can help you, challenge you, and then you can have a healthy debate, it's very important. The third, of course, is grace of God, which we have, because otherwise we won't be sitting here. So.
On that note, thank you, gentlemen, for taking time out and sharing your insights. Hope everyone enjoyed the discussion. Thank you.